The Bank for International Settlements, Power, Secrecy, and Control. One. Introduction. Behind closed doors, 19 unelected elites meet every 2 months in Basel, Switzerland. Their decisions affect billions of people worldwide. They answer to no parliament, no voters, no courts. Their institution is called the Bank for International Settlements, BIS. Some call it the central bank of central banks. Others call it the most powerful, and most secretive, financial institution in existence. Footnote. The BIS operates outside traditional political accountability while shaping the global financial system. 2. Origins and secrecy. The BIS was founded in 1930 under the Young Plan, originally to manage German reparations from World War I. But within 2 years the Great Depression collapsed those payments, erasing the bank's public purpose. Instead of dissolving, the BIS reinvented itself as a private club for central bankers. Its most defining feature was not transparency but immunity. Under its founding treaty with Switzerland, the BIS was granted sovereign status. Its property, assets, and communications cannot be touched by any government. In practice, it became a state within a state. Footnote. Sovereign immunity makes the BIS legally untouchable, a fortress for financial elites. 3. Controversy and Nazi finance. During World War II, the BIS's neutrality became complicity. The bank transferred looted Czech gold on behalf of Nazi Germany, accepted shipments of stolen bullion, including gold stripped from concentration camp victims, and facilitated foreign transactions for the Reichsbank. By 1943, over 80% of BIS income came from Nazi-linked sources. At Bretton Woods in 1944, U.S. Treasury officials demanded the BIS be abolished. Yet European central bankers quietly blocked the resolution, and the BIS survived. Footnote. The BIS's survival after its Nazi entanglements cemented its reputation as untouchable. 4. The Club of 19. Today, the BIS has 63 member central banks, but its real power rests in the Economic Consultative Committee, an inner circle of 19 central bankers. They gather in Basel's tower, shielded by diplomatic immunity, to discuss global monetary policy. Assistants and minutes are excluded. After formalities, real decisions are often shaped informally over wine at private dinners. No transcripts exist. No accountability follows. Yet interest rates, liquidity programs, and inflation policies emerge soon after. Footnote. The BIS inner circle operates by consensus, secrecy, and personal trust, not democratic oversight. 5. Post-war survival. At Bretton Woods in 1944, the Allies voted to abolish the BIS at the earliest possible moment, citing its role in laundering Nazi assets. Yet the resolution was never enforced. By 1948, pressure from European central bankers had reversed the decision. Instead of punishment, BIS leaders received promotions. Thomas McKittrick, the wartime president who collaborated with the Reichsbank, became vice president at Chase National Bank in New York. Shielded by Swiss law and diplomatic immunity, the BIS emerged from the war stronger than before, now positioned to expand its influence over the post-war global financial system. Footnote. Despite calls for abolition, the BIS was preserved through quiet lobbying by European elites. 6. Expansion of power. From the 1960s onward, the BIS forged partnerships with the IMF and the World Bank. In 1994, the U.S. Federal Reserve formally joined, cementing the BIS as the hub of global monetary governance. Its balance sheet remains modest compared to the Fed or ECB, but its real strength lies in coordination. The BIS facilitates policy consensus across central banks, interest rates, liquidity measures, and now digital currency frameworks. Its power rests not in size but in the invisible architecture of influence, the ability to guide the policies of national banks that directly affect billions of people. Footnote. The BIS's real authority comes from coordination, not capital reserves. 7. The ritual of Basel. Every 2 months, central bankers gather at the BIS headquarters in Basel, Switzerland. Arriving by limousine, they bypass customs and security under diplomatic immunity. Meetings take place in the secure Economic Consultative Committee room, followed by private dinners on the 18th floor. Here, the tone shifts from policy discussion to informal consensus building. The minutes are never published. Parliamentary oversight is non-existent. These gatherings are not symbolic, they are where decisions that shape global interest rates, currency flows, and liquidity programs are quietly cemented. Footnote: the Basel meetings demonstrate how unelected officials shape monetary policy beyond public scrutiny. 8. Inflation and public narrative. Central banks have one critical tool: controlling the story. When inflation surged after the pandemic, the Federal Reserve, ECB, and BIS repeated the same mantra: inflation is transitory. Behind closed doors, central bankers coordinated this narrative, not as economic fact but as psychological management. By framing inflation as temporary, they sought to calm markets and households while quietly tightening liquidity. Yet reality diverged. Prices remained elevated, wages lagged, and households bore the brunt of policy miscalculations. The BIS's role was not to inform the public but to preserve stability by controlling expectations. Footnote: the BIS narrative strategy reveals its dual role: policy coordination and public perception management. 9. The digital currency revolution. Cash once offered privacy and autonomy. It could be exchanged without surveillance, batteries, or internet access. But the pandemic accelerated a shift. Governments and central banks framed physical cash as unsafe and outdated. Into this climate stepped the central bank digital currency, CBDC, programmable, traceable, and permanent. Unlike decentralized cryptocurrencies such as Bitcoin, CBDCs are issued directly by central banks, designed to maintain full control over the monetary system. The BIS Innovation Hub now coordinates CBDC pilots across more than 130 countries, covering nearly the entire global economy. Footnote: CBDCs represent the largest monetary transformation since the creation of fiat paper money. 10. Control through code. Unlike cash, CBDCs are programmable. Rules can be embedded into the currency itself. A government, or even a private bank acting as issuer, could restrict where money is spent, set expiration dates, or impose penalties for disfavored transactions. Combine this with digital ID systems and QR-based verification, and money itself becomes a form of permission. Donate to an opposition party, exceed your carbon quota, or miss a compliance requirement, and your account could be frozen automatically. What was once a tool of exchange becomes an instrument of behavioral enforcement. Footnote: programmable money transforms currency into a mechanism of surveillance and discipline. 11. The role of the BIS. The BIS is not simply observing this shift, it is leading it. Its Project M-Bridge and other pilots are creating cross-border CBDC systems to replace traditional payment rails like SWIFT. In its own words, the BIS insists that central banks must have absolute control over the use of digital currency and the technology to enforce that control. This reveals the true ambition, not merely modernization, but a financial architecture where privacy is eliminated and monetary autonomy exists only at the discretion of unelected elites. Footnote: BIS officials openly describe CBDCs as instruments of absolute control over money. 12. Consequences for democracy. Central bankers are not elected. They are insulated by diplomatic immunity, generous pensions, and secrecy protections. Yet their decisions directly determine interest rates, mortgages, employment levels, and now the very nature of money itself. With CBDCs, the balance of power shifts irreversibly. Citizens no longer hold currency, they hold licenses to transact, revocable at will. The BIS insists this is efficiency. Critics warn it is the infrastructure of a digital concentration camp, a financial system where freedom survives only on terms dictated by unelected technocrats. Footnote: CBDCs risk collapsing the boundary between economic policy and direct political control over individual lives.